Alright, what's up everyone? Welcome back to the channel. I'm Tokenized, and I'm here to bring you guys in-depth analysis, news, and insights from the digital asset space, along with covering the progressive tokenization of the world. And if you haven't yet, be sure to check out the Twitter, Instagram, Medium, and Spotify for more fundamental analysis content just like this. So today we're going to be taking a deep dive into LCX. And for anyone who hasn't caught the breakdown and basic summary of what LCX does yet, the link will be right up above. Simply put, LCX is a regulated exchange that's working to build towards the tokenization of assets and the blending of this digital asset space along with our traditional financial system. So in this video, we're going to be getting pretty detailed into each one of these topics. So I'll be leaving a timestamp below, and I do suggest you guys check out the breakdown, as some of this stuff I'll be going over, I'll just be assuming you guys have went through that breakdown. And as usual, before we get started, just got to remind everyone that I'm not a financial advisor, and therefore nothing you ever hear or read from me should ever be taken as any form of financial or investment advice. But now that we got that out of the way, let's get right into it. So to start off, let's rewind a little bit and talk about Liechtenstein itself. They're headquartered based in Liechtenstein, which is a small country in Europe that's only about 160 square kilometers, and it's right in between Austria and Switzerland. And well, they're a very small country. Not only is it small in size, but the population there is relatively low as well. And well, the reason they're even a country is, even though they're so small and in between Austria and Switzerland, it's largely because back in the 1800s, a holy royal emperor decided to make the little bits of land a principality and pretty much built a castle while naming it Liechtenstein, yet this castle was never actually built in Liechtenstein directly. They are actually members of both the EU Council and the United Nations. And they've got some really close relations with the Swiss that dates back all the way to as early as 1904, when they signed a customs union agreement in 1924. And in fact, their main currency there is the Swiss franc. They have the highest GDP per capita, and this is largely because a lot of large trade companies choose to operate there because of their global alliance integrations to some groups like the World Trade Organization, the Euro Free Trade Association, Euro Economics Area, and a lot more. And well, another reason to why their GDP per capita is so high is also because for some time they've been seen as a tax haven, as they've got some of the more laid-back tax laws, which is of course one of the reasons why there's so much economic growth there. A lot of companies are kind of incentivized to move over and do their business operations in Liechtenstein. But that tax haven part has somewhat been resolved, as the EU was kind of unhappy about how Liechtenstein was going around their laid-back tax laws. So since January of 2019, they've revised some rules around their tax system, and largely around anti-avoidance rules, specifically towards things like dividends, capital gains taxes, and other foreign sources of income. But I mean, even now, when you're making upwards of 100 grand a year in Liechtenstein, you're still only taxed 5%. That's much better than the US or many of these other countries out there. So obviously this is kind of seen as a country for rich people to do business here. In fact, the cost of living and average standard of wages here is actually second only to Switzerland. And it's sitting at about $92,000 in yearly income. But overall, Liechtenstein is a really beautiful place with a lot of sightseeing to do around lots of mountains. So if that's your thing, well, Liechtenstein might not be a bad place to drop by. Now that we've gone down the history of Liechtenstein itself, let's take a brief moment and look into the history of LCX. So the whole idea of LCX came from Monty Metzger, their CEO, during his time at Digital Leader Ventures, where they couldn't partake in the growth of blockchain and DLT. So Digital Leader Ventures is the investment firm that Monty Metzger was working at prior to founding LCX. And so founded in 2018, LCX has planned out their mission to bring the adoption of institutions into the space with a platform and standard framework for them to not just use, but even tokenize their non-fungible and illiquid assets. And this whole idea was formed on a napkin earlier in 2016 by Monty, when he was just scribbling around ideas on basically how to find the right gateways to legally allow institutional investors to take part in this space. And since then, they've moved far beyond an idea on a napkin, clearly, and they've established not only a real business plan, but they've joined multiple consortiums and academias. And we'll get a bit deeper into these organizations and alliances they're working with in just a little bit. Not only have they built out a strong business model and a business ecosystem, they've built out a really strong community, especially thanks to Monty. Now, with the overall LCX vision, the vision for LCX is to bring the old world of traditional finances and securities to blend into this world of blockchain and DLT through tokenizing pretty much every financial instrument. So these would be things like your stocks, bonds, ETFs, commodities, etc. Stuff you see in legacy markets. And they've got a really strong belief at this new financial order as part of the fourth industrial revolution that they work so closely with the World Economic Forum for. And this is something that sometimes causes a lot of controversy when people look at LCX. So the financial or value side of this, so to speak, is based around automated digital assets. So like, for example, our stock exchanges and legacy markets, that's all human powered. That's why they only operate from 9 to 4 and close on weekends, because even Wall Street needs to take a break sometimes, right? So really their vision is looking to provide a core infrastructure for this future revolution in value, and that's something they've seemed to really lay the framework for, especially with their Liechtenstein Protocol, and we'll touch up more on that in just a minute. But before that, let's talk about how they've really laid down this infrastructure, because we hear this term all the time. Project XYZ is building the infrastructure for the Internet of Value. Project ZYX has established the infrastructure for the future of Web3. So how has LCX done so? Well, firstly, they're working with some of the biggest, most authoritative figures in the world. But to do that, what would you likely need to do? Be regulatory compliant, of course. Now, we all know LCX is quite a mastermind when it comes to laws, especially thanks to the Clear Blockchain Act that has actually stated the regulations for crypto assets within Liechtenstein. But let's really dive deeper into this and see what their 8 licenses are all about. So essentially, all these licenses to operate are registered by the Financial Markets Authority in Liechtenstein under the Token and Trusted Technology Service Provider Act. Alright, so the first license is their Exchange Service Provider license. This gives them the regulatory approval to operate as a regulated exchange and swap between legal tender, which basically means legally accepted currencies to swap into tokens or vice versa, or even token to token. Just your usual, exchange stuff you do in most crypto exchanges. But having this license means they're legitimately able to do this in a legal manner. And most of these exchanges we use actually don't follow this rule. I won't be pointing any fingers, but many large exchanges in this space actually don't have a license to be an actual exchange service provider. And well, I'm sure you guys could imagine what might happen once regulations kick into these side of things. Then there's their token depository. This, you could say, is similar to a bank being able to safeguard your funds for you. Only the way this rule works is that the tokens held in custody have to be separated from other correspondent users, so that something like a 2008 great financial crisis where nobody knows who owned what might happen. Now, on top of token depository, they also have a key depository license where it pretty much lets them safely custody over one's private keys, which will of course work hand in hand with their LCX Vault, their institutional grade custody service. They're also registered as a price service provider, and this works with their price oracle service feeds and pretty much lets them provide reliable real-time prices for crypto assets through oracles and data aggregation, and taking in and verifying other third parties for the most accurate market prices. And they also serve as an identity services provider, meaning that they can legally identify and KYC a person in possession of certain tokens and their records, which is of course a core component of their STO service, where they have a real-time cap table of who owns what security token. And as their tokenization service is essentially generating and minting security tokens and other tokenized assets, they of course decided to get a license to allow them to legally generate other tokens too. And this is the Financial Markets Authority registered token generator service. And last but not least for their licenses is their token issuer approval, which lets them legally issue tokens under either their own name as a company or for their clients, which is of course largely what allows them for their STO Launchpad to work within the proper frameworks when bringing in other companies or even issuing tokenized assets themselves. So you guys can kind of see how all these licenses tie in together and kind of make up the core of LCX. It's all these regulatory approvals that kind of let them legally operate in a way that institutions, governments, and enterprises will want to take part in. And especially thanks to their security token launchpad, that this brings in a whole new flow of capital into markets in a way we haven't seen before. And of course, having these approvals make partnering and joining these huge organizations like the World Economic Forum actually want to work with LCX to build a sustainable future in blockchain and DLT. And so while we're on the topic of regulations, let's talk about MiCA. MiCA essentially stands for Markets in Crypto Assets, and it was a bill created by the European Union back in 2020 to try and bring regulatory oversights into the crypto industry. And it's still sort of in its voting phases with some of the previous rules in there that had been taken out, such as the proposal to ban proof of work mining. And I won't get too deep into the overall MiCA bill in this video, just because that could be a whole video in itself another time. But what's really interesting in this bill, keep in mind, this was literally drafted up by the EU Commission, so it's not just some random proposal from your crypto company. They actually mention LCX as one of the few players that are being compliant and setting an example for a regulated environment. And they were mentioned alongside the London Stock Exchange, which, as we know, works closely with Alliance Block and the Swiss Digital Exchange. This bill has been something that's been a super serious topic in this space, especially in the EU for over the past 1 or 2 years now. A lot of stuff in there is like your basic coverage on what a DLT is, different types of tokens. So like you got your payments and exchange tokens that operate mainly as a form of bridge currency as payments, such as like XRP and Stellar Lumens. Then you've got your investment tokens, which would of course be similar to the STO Launchpad that LCX offers, in addition to some of the other tokens that may be able to be classified as a pure investment. And this is kind of that gray area for whether something is a security or not that tends to rise to question, especially in the US. And of course, our favorite utility tokens. These usually run with either or both mechanisms of enabling access to certain digital products and services, or is used as a reward for maintaining and validating a DLT network. And a really important point here actually is that they state that utility tokens, much like payments and investment tokens, can be listed on secondary markets to trade, but it also means that it supposes the utility token in question is actually enabled for trading when it was initially issued, along with having enough demand for the token to be traded, which might not be the case for some single dataset ecosystems. And then last but not least, they also mention hybrid tokens. So these would be some tokens that don't exactly fit under just one of these, but maybe under multiple. So take something maybe like XDC, for example. It's a utility token on the XDC platform to use their digital products and services. But it can also serve as a form of payments thanks to its quick transfers and low fees. Then there's also stablecoins, which they believe could be titled under the form of eCash or electronic money, as long as they prove the proper backing, which would mean they qualify as a legitimate financial instrument. Now, when we talk about the concept of money in economics, there's three main features to it. It can be seen as a consistent store of value, meaning you can hold economic value in there, much like how our dollars supposedly are able to hold our economic value for future spending. There's also got to be a unit of account, meaning there needs to be a way to denominate and measure the market value of goods and services along with the value someone has. And finally, of course, it's got to be seen as a medium of exchange, meaning that it needs to be legal tender to where when you offer it as a form of payment, it has to be accepted. So for example, something like Chuck E. Cheese tokens fit under the store value and unit of account needs, since those Chuck E. Cheese tokens can be denominated in a fungible value along with having a unit of account, as in, okay, this toy costs 4 Chuck E. Cheese tokens, I have 5 Chuck E. Cheese tokens. But what it doesn't fit is the medium of exchange function. Well, maybe in their franchise it does, but you can't go to your local superstore and pay in Chuck E. Cheese tokens. You'd probably get escorted out by security for wasting their time. Now, we've gone down quite a bit of a rabbit hole about MiCA and what defines as a legitimate form of money. And I don't want to stray too far away from the whole topic of LCX deep dive. I mean, that's the point of this video, right? But you guys are kind of seeing just how wide of a coverage this MiCA bill has, and just kind of the impact it has when LCX is included as a sort of correct model for going about how this industry really is. And there's also a lot of talks about how DLT can benefit in an economy from bringing more value added and the overall efficiency, but I'm sure most of you guys have probably heard enough about all that if you've been here for some time now. So let's move on from MiCA to the next part of this deep dive, where we'll be covering some of their connections with the World Economic Forum. And as we previously mentioned, LCX is working very closely with the World Economic Forum. In fact, Monty's been to a handful of World Economic Forum held events and is seen as one of the bigger faces in the blockchain space around there. And having their team be built up of people that might as well be global elites, so it's more than likely they've got some pretty strong connections behind the scenes that we probably won't get to see. But let's dissect some of the things said in these meetings around the World Economic Forum and some of these other large organizations. So to start off, they've actually joined the World Economic Forum's Center for the Fourth Industrial Revolution back in January of 2019. So this is essentially a multinational stakeholder platform with a focus on building more inclusive governance through technological innovations. And the Center for the Fourth Industrial Revolution are located in 15 different countries, with the centers in India and Japan being directly ran together with the World Economic Forum and the respective governments. And the center in San Francisco, USA actually serves as the overall catalyst and coordinator for this whole organization and initiative. And they're collaborating together in an effort to bring new use cases for DLT to be used in industries like banking, finance, and regulations. And in September of 2018, LCX had even engaged in a secret closed-door World Economic Forum event titled Central Banks in the Age of Blockchain. And this was held in Singapore that saw senior executives from 15 central banks. So the goal of this meeting was pretty much to discuss a framework that would allow better cross-border interbank settlements, regulations around digital currencies, bridging our traditional legacy system to this new technology, and of course, a big focus on CBDCs. Now, if we piece this together and try to connect some dots, We know that this event was held in Singapore. Singapore has their own CBDC project going on, Project Ubin, right? That's been closely working with the Bank of Canada's CBDC, Project Jasper. We know there's multiple critical pieces of the Canadian economy in the Blockchain Research Institute that LCX advisor Don Tapscott is chairman of, which in return of course means LCX is also a part of. We also know that LCX and Quant have been partnered to build an overledger gateway into LCX to allow interoperability both on other chains and allowing other legacy payment railways. But that's not all they're partnered for. They're also working together for research and development on an interoperable CBDC. So now the pieces are kind of coming together, right? Now both Ubin and Jasper are cited in one of the ODAP papers. And on top of this, in one of the Project Jasper papers, they had mentioned a need for a standard that would allow interoperability without the need for changing the underlying protocol itself, in addition to mentioning ISO. Interesting. It's not like Quant founder and CEO Gilbert Verdian founded an ISO standard for blockchain and DLT interoperability or anything, right? And then next we look into Project Ubin's development in Phase 5, where they talked about a broader cross-border ecosystem. Well, we look here, they mention API gateways. And I know this isn't a quant deep dive, but remember, this ties directly into the other half of their partnership together. And while most times, if you're a fan of LCX, you're probably also a fan of Quant. No maximalism on this channel. So yeah, obviously we don't have the most concrete evidence, but a large part of being a deep researcher in this space is piecing it together ourselves. And while based on what we know and what we've seen, I don't think this is too far-fetched to think, especially with the partnership with LCX and Quant, in addition to both them indirectly working with central banks together through other entities and organizations, is playing a large role in the CBDC development. At another World Economic Forum meeting that LCX, well, specifically Monty had attended, was largely focused around the idea of the Sustainable Development Goals future and the innovations to get there. And so these events such as the annual Summer Davos, which often sees industry leaders from around the world, especially in anything regarding tech there. So it's a great spot for further networking, and I'm sure Monty sees it the same way. And this has really spurred up the whole LCX is a part of the Great Reset sort of ordeal, and seeing Monty wearing that Sustainable Development Goals pin. Now, I don't want to be a conspiracy theorist or anything, so my personal thoughts on this is just that Monty and LCX have some close works with the World Economic Forum, especially with how they were in a closed room meeting with 15 other central banks. I mean, it's not everyone that gets that opportunity. Now, let's take a little deeper of a look into their team. We did give their team quite a detailed overview in the breakdown, but let's really see what we can find around here. So we know all about Don Tapscott and him being chairman to the Blockchain Research Institute, which brings LCX that much more connected with some giants in various industries like the Bank of Canada, Deloitte, KPMG, Microsoft, Accenture, and Tencent, and tons more. But this actually isn't the only organization or think tank that he's running. He's also CEO of the Tapscott Group, which is essentially his own brand where he quite literally does everything. I mean, there's academic stuff, like talking about his time as a chancellor for Trent University, and then there's books and articles here he's written, such as this Revolution series he started around blockchain, and then just a ton more books he's either authored or co-authored, revolved around networking, macroeconomics, and the digital economy, and other things along those lines. So since then, he's sold over 5 million copies with 8 bestsellers out of his 17 books. And then of course we know he's also done a bunch of speeches around the world on the future of technology, with his TED Talk on blockchain being probably the most prominent one. But he's also spoken at a ton of other high-level conventions that most people, even in C-level positions, wouldn't get the opportunity to. For example, he's spoken at the EU's first innovation convention back in 2011 and discussed on basically how to rebuild failing institutions. He's also presented in front of the US State Department with the focus on his book, Macroeconomics, to discuss the power of a global coordinated network intelligence system. And then beyond just the TED Talks he's had on blockchain, he's also held another previous one about the 4 principles to an open world, that being collaborations, transparency, sharing, and empowerment. So he's really regarded as a thought leader around the world. In fact, Thinkers 50 ranked Don as one of the top 50 living business thinkers in the world. Now that's quite a title to be holding. And remember how we said we'd touch back on the World Economic Forum? Well, with all this status and experience in his bag, of course he's also joined one of the most powerful global organizations out there, that being the World Economic Forum. In fact, he hasn't joined as just another regular member. He's their senior advisor. To be the senior advisor for the World Economic Forum, I mean, come on, it really doesn't get any higher than that. And to have him not just advising LCX, but to have also have said LCX will be one of the most important companies in the world, make what you will out of that. And one advisor we didn't cover last time was David Mikkelsen. He's seen as quite the social entrepreneur. He's been working in the fields of providing a more sustainable and healthier future through innovation for our world for quite some time now. So quite a lot like Monty, as they both got their educations in Harvard in quite an interesting field revolved around innovating and changing the world. And David's 2 main focuses have been his own startups, being Untitled, which is a global scale health agency with the focus of building innovative solutions to prevent, diagnose, and treat diseases in the most efficient manner, and a large focus of their operations seem to be around things like HIV and AIDS. And on top of this, they're the largest non-governmental provider of a lot of resources in this industry, namely things for children's tuberculosis and malaria treatment. And they've actually collaborated with the World Health Organization on multiple occasions. And while many of these medical healthcare suppliers tend to have some donations to them, right? So they're actually funded by some nations such as the UK, Norway, Brazil, Spain, etc. But what's really interesting is that the Bill and Melinda Gates Foundation is also one of the groups funding them. And the other startup David runs is Ref United, which he's been running as the co-founder and CEO of for the past 17 years. Ref United is short for Refugees United, and they're a non-profit that works to reunite families together. And they've got a list of partnerships here, which is just insane. I mean, they've got BlackRock, Harvard, Google, IOTA, United Nations, SAP, and of course the World Economic Forum. So yeah, pretty serious stuff. And now, another thing is that pretty much every one of these advisors have some connections to the World Economic Forum in one way or another, whether it's being their senior advisor or just having partnered with them or just having joined the organization. And while the connections in their team just run insanely deep to just about any sector you could think of. And don't forget, some of the other guys that we covered in the previous breakdown, like Plamin being founder of the Virtual Show, Yatsu from Animoca Brands, Miko's experience in the world of crypto, and much more. I mean, just look at this diagram. And then of course we know Monty has some works with the World Economic Forum himself. It really gets you thinking, is this like an inside project from the World Economic Forum for the Great Reset and the digitalization of assets? Well, I don't know. We'll have to see. Now, we also briefly went over this mystery advisor that they have on their team's page in the breakdown. And we kind of came to the conclusion that this might indeed be Brian Armstrong of Coinbase. But let's dive a little deeper and really try and connect these dots with the evidence we're provided. So what we do currently know, we know that this silhouette perfectly matches Brian Armstrong, from his skin tones, even in black and white, his bald head and the shaping of it, to the placement of the ear, the shoulder broadness and structure, and a black t-shirt, which actually doesn't say much at all. I'm wearing a black t-shirt myself right now. But now let's add in some other external pieces of evidence. Coinbase, as we know, is another really big crypto exchange that also has their own respective licenses and is even publicly listed. So of course, they're also playing by the rules. They're also one of the OGs when it comes to the centralized exchanges, if not the OG. I think we can all agree on that. While Coinbase just so happens to also be working with the World Economic Forum and has been mentioned by them on multiple occasions. Now let's tie all that into the fact that LCX is the only exchange token listed on Coinbase aside from Crypto.com. But that's probably because of just retail demand and them knowing they'll rack up a ton of revenue and fees. But like no Binance, no FTX, no KuCoin, not even Gemini US dollar or anything like that. Yet they chose LCX for some reason. Keep in mind this is a token that's close towards the 500 end on the market caps chart. And Coinbase is usually known to be listing sort of less speculative tokens with a little bit more of a history. So ones that are usually higher in market cap. And not only that, but it's also added towards their Coinbase custody. This is an institutional grade custody service, much like what LCX offers with their vault. Now, why would they open up custody services for a token that is in the mid to lower half of the top 1000, unless you knew there'd be some level of demand from there? Which now brings us to our next point, where we've seen some really strange transactions on the LCX token itself, and especially through some Coinbase wallets. For example, so we take a look at some of the big wallets that have interacted with Coinbase's wallet, and well, there's actually quite a few in here that have some large amounts of LCX. Like, all of these at the very least 300k worth in US dollars. And I mean, just look at these transactions. Isn't it funny that in the span of this short period of time, all this LCX happened to leave Coinbase into these wallets that hold nothing but LCX? This is some really weird behavior going on. And for those of you guys following my Twitter, you may have already seen this thread where I broke down what I discovered of what basically happened in the span of 29 seconds. Basically here, I highlighted all the numbers with repetition, whether that's the wallets, time, or the transactional volume. You'll notice this number pops up a lot in the withdrawal amounts, 2.148 million. In fact, it was withdrawn from Coinbase wallet a total of 27 times, but it never repeats any more than 3 times. Usually a transaction of 1.841 million comes to stop the repetition in its tracks. And oftentimes it seems that 3 consecutive transactions will fill these wallets, then move on to the next wallet. So that's already really interesting. You got nothing but these huge transactions sending outbound to these wallets in a repetitive manner. Like there's literally no other transactions going out at this time. Of course, the next logical step was to take a look at these wallets, and what I found next really blew my mind. These wallets all had a couple things in common. These Coinbase to wallet LCX transactions are the only transactions in there. No outbound transactions, only inflows of LCX from Coinbase, and they all hold literally the same amount of LCX down to the exact decimal point. So that really confused me. I counted up a total of 12 wallets with this amount of 6.1 million LCX in each wallet. Some of these wallets filled to that amount with as little as 3 inbound transactions, while some of these other ones took as many as 10 transactions to get there. But regardless, they're holding the exact same amount of LCX with absolutely no other tokens, no other transactions, not even some ETH for when they might want to send it somewhere. So that's some pretty juicy stuff there, because you're not going to see this kind of behavior from retail. I mean, just from these 12 wallets alone, that's 73 million LCX in these wallets, about 13% of the circulating supply at the moment, which gets even more interesting when you line it up to some of the strange behavior we've also seen on Quant's end of the Coinbase wallet. And we know that these two are close partners with a very similar vision. But before we wrap up these transactions, I also took a look at some of the transactions from the Coinbase wallets earlier on, and what I found here might be even more confusing than what we just saw. So this is just on the second page on the LCX transactions if you sort it from the start. And what we can see here is over 100 transactions of 34,117 LCX exactly. This was withdrawn all from Coinbase wallet to multiple other external wallets, just like earlier. And these were the only transactions that took place at this time, much like earlier. Now, I have dug a little into some of these wallets, but there really wasn't all too much I could piece together. But basically, some of the conclusions I've come to is that either an institution is buying LCX on Coinbase and locking it via their Coinbase custody services. It could also be an institution that's just buying from Coinbase and holding custody of it themselves across multiple wallets. Or maybe it's Coinbase themselves buying. After all, they do have their investment arm, Coinbase Ventures. Or you know what? Maybe Coinbase knows there's people like us who like digging into these transactions and they want to play some games. All these theories still wouldn't make any sense as to why they need such a focus on the precision here. I mean, exact same time, same amounts. There's definitely more to this that we don't know of yet. But that was quite the rabbit hole, so let's come back a little. Let's take a look at the Liechtenstein Protocol. So we briefly covered this in the breakdown. It's basically the standard framework that LCX has rolled out for a regulated system to tokenize securities and create security tokens. But why is that such a big deal? Do we even need something like this? Well, it's not something we absolutely need in the sense of life or death per se. But in this day and age where you can send emails instantly, you can send photos and videos rather instantaneously, but it still takes 2 days for security to settle, the bunch of loopholes it's got to jump through, and at the end of the day, you never even get actual ownership of that said security. You're just handed an IOU. So yeah, tokenized securities aren't a necessity, but they will completely change the game. And LCX wants to be at the forefront of all that. There's going to be a ton of rules around tokenizing securities. I mean, you got to make sure they're actually backed by the underlying asset and index itself. Then you got to make sure that the underlying asset can actually be tokenized and offered to a respective jurisdiction. And while we see money laundering in stocks all the time still, with paper certificates of stock ownership, it's essentially like using cash in the world of equities. But with LCX's tokenization model with the real-time cap table, they'll know everyone who's registered and whitelisted wallets is holding these tokens, that they've made sure are legally able to do so. But not only that, because private securities are usually so illiquid that they're not worth trading most times, since it's a smaller overall market and there's just not the liquidity there. Tokenizing these private securities will open it up to not only be more liquid overall, but just give the concept of private securities a much more wider access globally. But that brings us to the next point and flaw about secondary and open markets. So in our current world of securities, onto the secondary markets, meaning business to consumer, there's normally a bunch of middlemen to jump around, that usually being exchanges and stockbrokers. And not only that, but most times each security or each stock is traded on average 16 times. This means that your stockbroker says you own your share of Tesla. But if there was suddenly a run for the exits and 15 other people also own this share, who are they going to refund it to? Now you guys see the problem, and this is largely what started the 2008 Great Financial Crisis. Nobody knew who owned what, and there was just too much leverage in the system overall. And tokenized securities can of course solve some of these issues, because now with a DLT you can actually see who owns what at what time, where and when it was transferred, and just about every solution to ensure that true ownership is in place without any need for some indirect form of leveraged derivatives. And so here we kind of get a look at how the protocol will work, in the sense that a transaction will go through the Liechtenstein Protocol contract, then route it to the compliance and identity check layers before the cap table gets updated and officially settled and finalized on the other end. And so they've already worked to integrate this protocol on Ethereum, probably because it's the largest smart contract platform out there. But then there's also their partners on Polkadot and Icon. And so some of the other functions that tokens following the Liechtenstein protocol will have are things like time locks, where essentially it's no different from just locking certain vested tokens until a certain time, so they can't just dump everything on retail. Then there's also token burns.
Don't think I gotta go too in depth on this one. We see this all the time with token burns, where companies may buy back their equity or token to increase their holdings in the company, or just to reduce the overall float and dilution. There's also a pause function in the case that there might be some technical or legal issues that might have been unseen before, in addition to also handling certain illegal arbitrage strategies. And then, of course, an identity management that we've talked about previously, which makes sure everyone interacting with these security tokens is a verified users, and for a bunch of legal reasons I'm sure you guys could imagine. And so this is kind of something that hasn't been done before, building a regulatory framework to tokenize assets by a private sector company. And as we said last time, while this is called the Liechtenstein Protocol, the overall goal is for this to be a globally adopted standard, with all these countries talking about asset tokenization and the future of blockchain and DLT, especially in the financial markets. Well, I think eventually we'll need a way to have a legal standard that allows this technology to flourish and flow into our legacy system, but we'll also need more rules around it, as with every kind of innovative technology. The Liechtenstein Protocol seems to be just that. And while speaking on tokenization, let's look at some of the projects and other things that they've actually tokenized or just done and managed token sales for. Perhaps their biggest one was tokenizing the Roe v. Wade movie. This was pretty big for a couple reasons. It was a huge controversial event, but not only that, this was the first ever concept of a real tokenized movie where you could get shares of the revenue from how the movie did. So this brings a whole new world of incentives to the community. The producers don't have to use money out of their own pocket and sweat equity or any loans, but rather use the funds from the community and then distribute a portion of that revenue back to them, while also even sometimes giving the community a say in certain aspects of the film. So win-win for everyone. The way it should be. Then we've also mentioned their tokenization of diamonds in their Terramoons. Pretty fascinating concept. Real asset-backed one-to-one NFTs that are redeemable for the real thing. And I'm sure we're going to continue to see more stuff like this in the future. Not just from LCX, but other big institutions too, as they begin to tokenize assets that normally aren't liquid or fungible at all to be traded in a global manner. And this will improve not just liquidity, but also overall accessibility for that alternative asset class, and many other customizations around it. So the concept of TIA tokens came with Terramoons. They're tokenized diamonds in the form of NFTs that were redeemable for the real thing at the LCX vault, or could be mailed to you. But aside from that, you could also passively earn income in TIA tokens. So Terramoons are the tokenized diamonds in the form of NFTs that were redeemable for the real thing at the LCX vault, or they'd mail it to you. But aside from that, you could also passively earn income in TIA tokens, which are the tokens for that Terramoon economy, and pretty much over the course of 1,000,000 minutes, you'd get 1,000,000 tokens. So that's just another incentive to their ecosystem. And they've actually modeled their tokenomics to be a lot like those meme coins we saw earlier in 2021, where we saw there was a 10% transaction fee, and then 5% of that gets burned and the other 5 gets redistributed between the liquidity pool and the token holders. Now, you guys know how I feel about meme coins, but honestly, this token model has always seemed super unique to me. It does create a really interesting incentivized ecosystem and makes it so people would actually want to grow and participate in the community together due to the rise in value of that underlying community, right? It's also just that it was never really put in a real good applicable project that actually had something else to it besides hoping number go up. That's a large issue with SafeMoon, which had this token model. They did a great job at building a community. I think we'll have to agree on that, no matter what our thoughts on SafeMoon are. They also created a pretty unique token model to incentivizing a growing ecosystem over time. But that's where the good stops. They then proceeded to remove liquidity from the liquidity pool, and well, the project never really had too much direction to begin with. Versus Terramoons, which actually have a real underlying asset backing it with millennia of history in diamonds, in addition to, of course, being backed by the guys at LCX to be redeemed for an actual diamond whenever you want. So really, they're just building a community around tokenized diamonds, but with a token revolved around it that incentivizes those tokenized diamond holders along with the overall community. And then just to briefly touch up on some of their token sales management, they've done so for NFT Maker, which is an NFT minting project on Cardano, and Vision, which is an NFT Web3 media crypto project on Ethereum, and then DigiCorp's Metaverse, which is a metaverse project built out through the Digibyte ecosystem. And then they also had a tokenized bond for $10 million registered with Financial Markets Authority Liechtenstein. Now let's move on to some of the other partners now. So we spent some time covering their connections to the World Economic Forum, pretty much the biggest non-governmental organization out there. But there's a lot of other organizations and consortiums that LCX has joined, maybe a bit smaller than the World Economic Forum, still shouldn't be overlooked as they are still large organizations that work around policymakers and the overall industry. So they've joined OpenVASP. VASP stands for Virtual Asset Service Provider, VSAP. So simply, when a digital asset entity engages in certain types of financial activities that involve digital assets, there's usually some AML and CFT laws that they've got to follow to ensure safety and compliance. And these entities that follow by the rules can be referred to as VASPs. And this rule kind of came about in 2019 when the FATF, Financial Actions Task Force, decided to implement this regulation to have both parties share beneficiary information. So this has been in place and followed by pretty much all banks and financial institutions. But as with any sort of global regulation and standard, this will have to be applied to fintechs that want to work in a compliant manner too. So some of these financial activities would include things like exchange between virtual assets and fiat currencies, transferring virtual assets, safekeeping, and at times even enabling control over virtual assets, exchange between multiple forms of virtual assets, and services like issuance and offering sales for virtual assets. So falling into these categories would likely make you required to follow the FATF's VASP rule. And well, pretty much all of the things LCX does as a business falls under this model. So they've chosen to join OpenVASP, which is a non-profit organization working to advance these open protocols for transacting information across other VASPs and parties. So LCX is going to be contributing to OpenVASP by supporting their protocol as a standard of crypto financial messaging between other virtual asset service providers, and actually even implementing it on the LCX platform. And when there's global standards set like this, and the future of digital currencies becoming even more clear day by day with things like CBDCs, and even some private sector things like Facebook's Libra, which will all be required to follow the VASP regulations. This is a great move, in my opinion, by LCX to sort of bring them on the right side of regulated digital currencies if they weren't seen in that light already. And then there's also Global Digital Finance. And this is an organization of largely policymakers, regulators, and companies within the scope of the industry that sort of work together by forming the proper rules and pushing the adoption of digital assets in the best use. And so they're kind of all working alongside the other members in this consortium to collaborate and find the best ways to do that. So some of the members in this organization are some huge household names, and I'm honestly surprised that this organization isn't really brought up more. As we see here, there's guys like R3, SDX, Coinbase, London Stock Exchange, DLA Piper. These are all companies LCX either has direct or third-party connections to. And then we also see a bunch of other members here like Ernst & Young, Messari, Nexo, Credo, and a huge list of others. So I think it's safe to say that an organization that's working to build legal frameworks and push the adoption of digital assets not only fit the LCX vision perfectly, but also when you're working alongside guys like STX, R3, and Coinbase, well, that's a pretty good spot to be in as another crypto exchange. And well, the last large alliance we'll touch up on is the Blockchain Research Institute. And again, this was founded by none other than Don Tapscott, which he, of course, chairmans over. And this consortium pretty much looks to be a think tank for companies around this industry to collaborate and brainstorm ideas of blockchain and DLT to kind of innovate production and efficiency, both in the public and private sectors. And while the main hub and center for this is based in Canada, where Don's living, they are a multinational and global organization with not only members from around the world, but they've even got offices and business operations in locations like Korea, Africa, the US, Europe, Middle East, and even in Brazil. So yeah, they're pretty globalized and a pretty large organization out there. And just a quick rundown at some of their members, we see some huge names, not just in the world of crypto, but in legacy finance, big tech, some academias, a couple soft drink companies, and you even got Hyperledger in here. And well, there's a few interesting things I want to point out about some of the members in here. So firstly, we obviously see some policymakers and high-level authorities in here, like some central and commercial banks, accounting firms, etc. Now, notice who's this right beside LCX. The Liechtenstein Bankers Association. So this was established back in 1969, and they're pretty much the domestic and international voice of the banks that operate in and out of Liechtenstein. And well, a couple of the members that make up of the Liechtenstein Bankers Association are guys like Ernst & Young, PricewaterhouseCoopers, Grant Thornton, which is actually one of their legal partners, and the Boston Consulting Group. And so to see the largest bankers association in Liechtenstein join the Blockchain Research Institute alongside LCX, I think that's a pretty good sign for more adoption to come directly through LCX, especially from Liechtenstein. Couple other interesting highlights here. Now, because this consortium was created by a fellow Canadian, obviously we see some serious contributions here from the Canadian government. We see the Bank of Canada, Payments Canada, other Canadian government entities, some Canadian commercial banks, Interac, which is basically Venmo for us Canadians, and then even a couple Canadian telecommunications companies. So seems like there's a fair amount of connections to the Blockchain Research Institute from Canada. I mean, rightfully so. Don Tapscott's had quite the career in simply innovations, and he's a citizen of your country. Of course, you're going to try to work with him. And well, it seems like he's also taken quite the liking to LCX, enough to bring them into his consortium and be one of their key advisors at least. Now, who else has this close of connections to the Canadian financial system? Quant, right? Another partner of LCX. And while we've previously mentioned some of these connections from Quant and LCX to pretty much the financial and economic side of the Canadian public sector and Monetary Authority Singapore. Now, since we're talking about a LCX to crypto partnership, let's continue on that topic. So we already covered the one with Quant pretty in depth with the connections to CBDCs. But the TLDR for this pretty much is LCX and Quant integrating an overledger gateway onto the LCX exchange and having the ability to have different permission and permissionless chains and payment railways connect to LCX, along with working together to research for interoperable CBDCs. Now, we did cover a large majority of the LCX crypto to crypto partnership, so we'll just briefly give a TLDR for the rest of these, and the breakdowns for these partners you guys can find right up here in the corner. So VectorSpace Biosciences. They're integrating VectorSpace's smart thematic baskets onto the LCX exchange for thematic crypto baskets based on certain themes or events. So you could have a basket indexes for, let's say, a short basket for a global event like a earthquake in Europe, or maybe a basket index for DeFi or layer 1s or interoperabilities or regulated tokens, etc. The possibilities are pretty endless when you put your imagination to it. Hedera Hashgraph. They're integrating the Liechtenstein Protocol with Hedera's token services, which pretty much just allows any company to mint their own tokens. So this will allow a new paradigm of security tokens to be issued on the Hedera Hashgraph platform, while allowing clients of LCX to mint their tokens through this way. Constellation Network. They're looking to offer legal support for the overall Constellation ecosystem and their Layer 0 tokens. And along with this, they're actually going to be using the hypergraph for more efficient and transparent trades through building a state channel, which is essentially a business and ecosystem in its own on the hypergraph. Chainlink. LCX is going to be an official price services provider towards Chainlink to feed that data into the DeFi ecosystem and other markets. And as we've previously mentioned, they're a legitimately registered price services provider, meaning that they can simply provide these reference prices as a service towards certain DeFi protocols or other large investment firms that really need the most precise price feeds. Icon. They're looking to work together to build upon the infrastructure for security tokens. So they'll be working together to share and bridge an operational infrastructure between South Korea and Liechtenstein. Which is really good to see, because this is what we want to have more of in this space, right? Jurisdictions around the world agreeing upon a common set of standards for whatever it may be revolved around. This is what drives up adoption in the long run. Polkadot. Simply put, they're going to be integrating the Liechtenstein Protocol into the Polkadot ecosystem and all their side and parachains. And by adopting the standard, they'll also enable the trading of such security tokens in their ecosystem. So yeah, these are the sort of major infrastructural partnerships of LCX, because remember, they're beyond an exchange. Are most of their products and services exchange-based? Yes. Is that all they do though? Absolutely not. They've got a custody service, price feed service, token sales, covering legal, technical, and management. And well, the biggest thing, they're literally building the standard legal framework for tokenized securities. And that's already seen adoption from a few other blockchains out there. So overall, I think LCX is probably one of the best bets you can make for an exchange ecosystem. Not only are they just about the only exchange out there that operates in such a regulated manner, but we see connections in this team that we'd normally never see in 99% of crypto projects. When you're connected to so many entities at that level, well, I'd say your odds of success and scaling out that eventual network effect from both users on LCX and the adoption of the Liechtenstein Protocol is pretty promising. And I'm not just talking about connections to things like the EU, Blockchain Research Institute, OpenVasp, etc., which are all super important in their own way and most times even larger than their crypto-to-crypto connections. But even their crypto-to-crypto connections, I mean, you guys know how I feel about some of their partners in Quant, Vector Space, and Constellation. And well, I'm pretty damn bullish overall for Hedera Hashgraph too. And then of course there's Chainlink, which I think will continue to play an essential role to the greater crypto ecosystem, especially within DeFi. I mean, they're the monopoly for oracles at the moment, and they have been for quite some time now. Then there's Polkadot, which I'm also actually quite a believer in. Sure, they solve interoperability at a smaller scale than Quant, but I think there will be room for coexistence, especially with the development of ODAP in the future. Now, to wrap it up, we've broken down pretty much what makes LCX a next generation exchange and all the things they do that separate them from not just these exchanges, but many other crypto projects. And you guys have seen it's not just on the exchange side of things where we largely covered in the breakdown. Already do or are planning for more innovative products like their quantitative market making to incentivize users to have some funds to supply the exchange's liquidity while earning a daily yield, or their LCX Vault along with some of their other products like their trading terminal, of course offering security tokens. But it's really also the highlights on the other side of the operations where they've got an easy tokenization service that's fully managed in every aspect, something that's going to be a must for these institutions and large businesses. But the team and LCX themselves have also some of the deepest connections to some huge organizations and companies in not just the industry, but even when it comes to authorities and working with policymakers too. And then you factor in the mystery advisor and those strange transactions on Coinbase, and the fact they're even listed on Coinbase as a microcap. So yeah, the innovative products are definitely there. They've definitely got a solid community of supporters. The connections are there for sure, and the team's experience is most definitely there. I think these next few years with regulations being such a focus are going to be really exciting for LCX. And I'm surely going to continue stacking up my LCX bag once my targeted accumulation zones a little more. Because I think relative to what LCX will provide in the near future, to not just retail, but institutions and even government entities will be huge. And if you guys want to know exactly where I'm going to be looking to accumulate more of, you guys already know where to head over to. Terramoon Ventures with my discount code Tokenized for 25% off. That's where I host my weekly show Tea Time with Token, along with my special series there, Terra Links, for more deep dives, and pretty much where I share where I'm looking to buy, how I'm navigating around the markets, and all that kind of good stuff. And of course, you guys get some really high level TA from Brian. And again, all this will be down in the description box below. But yeah, that's pretty much it for our deep dive into LCX today. I hope everyone got something good out of it, whatever it may be. And as always, if you guys enjoyed what you saw today, be sure to drop a like and subscribe and turn that ringer on so you don't miss a thing. And also, don't forget to check out my other content platforms on Twitter, Telegram, and Instagram. Or for more fundamental analysis content just like this, be sure to check out the Medium and Spotify. All this can be found at Tokenizer, and I'll be sure to link it right down below. Anyways guys, as usual, stay safe and keep grinding. I'll catch you guys next time. Peace.